Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. Let's take a look at what's playing out across Wall Street, where we've got stocks slightly lower as investors take some profits off the table ahead of the highly awaited FOMC meeting, where markets are pricing in widely a rate cut. We'll get into that in just a few moments. We've got the S&P 500 lower by 0.1%, closing at 6,607. That's after hitting a fresh record earlier in the session. The Nasdaq Composite slightly down as well, 0.1%, closing at 22,334. The Dow also slightly lower, dropping 125 points, 0.3% down to 45,758. So we've got some of the big tech names lower, NVIDIA and Microsoft pulling back by over 1%. Palantir and Google parent Alphabet also pulling back. So what's going on? Let's check in now with Jason Britton. He is the founder and CIO of Reflection Asset Management. Jason, thanks for joining us on the show. How are you doing?
I'm great, Ryan. Good morning to you. It's good to be here.
Yes, great to have you on the line as we dive into the markets ahead of the FOMC meeting. So let's start there. What do you take away from how things are setting up ahead of the decision where we are already pretty much priced in for a rate cut?
That's right, Ryan. The market is almost 100% certainly priced in a 25 basis point rate cut tomorrow, bringing our range down from 4.25 to 4.5 to 4 and 4 1/4. So we're really now not anymore talking about inflation and what's going on, but we're talking about whether or not the Fed's going to continue to cut the rest of this year, with most market prognosticators pricing in at least one, but possibly two additional cuts by the end of this year.
Yeah, where are you sitting on this end, one or two, and what will be the indicators or data you'll be looking out for?
So I think right now the market can feel very confident that there will be one additional cut just because of the weaknesses around the jobs numbers in the States. I think the wild card, and we're starting to see some of that information unfold, is what's going to happen between the United States and China. And if the United States and China can reach a trade deal that is, harmonious, similar to what they would believe us they've done now on TikTok, it could be a very positive reaction by the Fed, and they are not going to necessarily need to hold on to that dry powder, and we might see a full 50 basis point cut by the end of this year.
Yeah, a couple of things that are playing out in the backdrop. You've got the tariffs, you've got the U.S.-China trade deal, and of course, you just mentioned the TikTok deal, which is perhaps part of a wider package of agreements with China. So let's take a look at what's playing out with TikTok. We have a U.S. buyer, a consortium led by Oracle, Silver Lake, and Horace Anderson. So that could help to move the needle on situation between the U.S. and China trade agreement. What are some of the positive outcomes, perhaps, that might come out of this deal between Oracle and ByteDance?
Well, so with all things, right, the devil will be in the details. And what's being currently discussed out there, and it was sort of leaked a little bit yesterday by Secretary Bessent, and then there were some conversations around with, Howard Lutnick earlier today on some of the morning shows here in the States. You're talking about China retaining a 20% ownership right through ByteDance, and you're talking about an 80% ownership of the U.S. assets. That's interesting in that, that's still a pretty significant hold, where if you'll recall, some of the political talk early in the election cycle here in the States was a full divestiture. They have to sell the entirety, and now we're talking about a 20% hold. That's different. That shows that both sides have really started to approach this in a much more congenial way, which I believe once they get TikTok settled, that will lead to a broader set of tariff-related issues being put to bed between the United States and China.
Okay, is that going to be good news for things like chip makers, the likes of NVIDIA and so on? Is that going to be tailwind for the tech space?
So I think it'll be a huge tailwind for the tech space. And for those listeners out there, and again, this is not consult your financial advisor, but if I were looking at this for my clients, if you think that this TikTok news is going to help dissuade the tariff barrier and battle between China, you might want to consider getting even longer some of those names. The NVIDIA trade is not done yet. Taiwan Semiconductor is not done yet. There should be some opportunity out there in some of those names to still run.
Yeah, opportunities to be had. And of course, we've been talking about how the AI space has been driven by pretty much the Max 7. Is this also a good time to look broader beyond the Max 7?
I think so. One of the things, Ryan, we saw in this sort of last almost 4 or 5 weeks of trading here, what we've seen is a broader lifting of a lot of the different stocks in the marketplace. So while it's still being led by the Magnificent Seven, you are seeing other names tick up. So it's not just the Magnificent Seven. And I think that speaks broadly to where American money managers and more broadly global asset allocators are getting more comfortable with the idea that the Fed is going to soften its position, make borrowing a little easier. Tariffs are going to become a little less unknown, and you're going to, I think, see the U.S. consumer have carried us through the summer and continue to bring now what will be going into the fall and then the Christmas season. It should be good news for the markets.
Yeah, Jason, talking about tariffs, how much is that going to be weighing on the FOMC's decision? Because we've been hearing about how they are perhaps taking an eye off inflation and taking a closer look at the jobs data, which has been not as robust in recent rounds of data.
So that's right. So remember, for those of listeners out there, there are two different mandates at the United States Federal Reserve, right? So one is low unemployment, and then the second is control of inflation. And what they have been doing is they've been using the tariff uncertainty as a lever to buy them time to make the decision to cut rates based on what would be the uncertainty around will inflation tick back up because of the tariff uncertainty. If that gets put to bed, the really only data points we'll have to focus on is the softening U.S. jobs market. And both in the last two jobs prints and in the previous two job prints, we've seen not only numbers that have underwhelmed, but you've also seen negative revisions, right? It cost the head of the Bureau of Labor Statistics in the United States her job not that long ago when she put out a number that the president didn't like as it related to what the jobs number were going to look like. So I think in this country, it's a really interesting time right now. We're one of the few countries with a central bank who've really focused on maintaining that independence from political interference. And you're starting to see that erode now. So I don't know if the data gets better, if people are going to trust it more, right? I mean, the FOMC meeting that's happening today is happening with a newly installed member who just got voted in last night and confirmed by the Senate. So it's really an interesting time here in the States where what was once these institutions who you could count on for independent data and analysis are starting to potentially be compromised.
Yeah, and also in the frame, we've got the UK possibly trade deal to be ironed out in terms of nuclear reactors, AI data centers, and even whiskey. And this comes as Donald Trump is set to visit London. So what do you make of that? Is it going to be another boost for markets potentially, which have already been grinding new highs every other week?
So I think so. I think that the market is going to continue to trade on sentiment. I think that this president is over now at a royal affair at Windsor Castle as the guest of the king, and is going to be lapping it up with the pomp and circumstance and the military parades and so on and so forth. Our friends in the UK certainly know how to put on a show. And that's going to result in some big announcements. And I think right now they're talking about north of potentially $10 billion worth of trade deals being announced over the next day or two. I don't know what that necessarily means for the people on the ground in the UK with the new data center north of London and so on and so forth. But I do think you're going to see the market respond positively to that news cycle. Yeah,
more deals to be done perhaps to lift markets. All right, let's take a look at the rest of the markets. We've got AI, of course, helping the tech space. What other places are you looking at? We've been hearing a lot about the retail space, seeing a lot of question marks about tariffs, about spending sentiment as well. What else looks possibly attractive value to you at this point?
So I think an interesting trade to consider for your listeners is as you look at going into the fourth quarter in the United States and the holiday shopping season, and you think about what the implications are of resolution between the U.S. and China. If you think about the number of things that are purchased around the holidays and the Christmas season in the United States, toys and clothes and so on and so forth, a large majority of that, especially it's the sort of what I will call your lower-end retail establishments, your dollar stores, your Targets, your Walmarts, et cetera, so your non-name brand luxury goods, you're going to see, I think, an uptick in consumer spending. I think that the American consumer is going to be take a sigh of relief and take a breath at the fact that the tariffs have sort of wound down or at least gotten more transparency around them, and you're going to see strong consumer spending into the holidays. So in addition to the AI trade and all of the associated hardware and energy as it relates to that, I also look for the American consumer and that discretionary trade to do well going into the Christmas season.
All right, lots of potential catalysts. You've got the trade deals potentially with the UK and possibly China, and of course the AI space and how the US consumer could help lift markets in time to come. We've been in conversation with Jason Britton. He's the founder and CIO for Reflection Asset Management. Jason, always a pleasure having you on the show. Thank you so much for your time and insights.
Thank you, Ryan. It's always a pleasure.
All right, catch you again next time. Stay at Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.